today I'm down just shy of $41,000 day trading, took a loss in the market, and this is the exact trade I took. But before we get into the trade and why it lost and what I learned, let's talk about exactly what my bias was, what I thought about coming into the open, and why I took the trade where I did. So starting off on the hourly time frame, what we're able to see is that we had hourly basis be very bullish based off yesterday's price. And then based off today's New York opening range move, we see a pretty bullish move in the market, right? Where we see a good buildup. If you watch yesterday's review, we had a healthy day based upon the fact of us riding into this bull bias. What you then see price do through overnight price and for the bulk of New York is you see price come up here and you see price finally trade out of its hourly range. So this hourly range here had a low, had a high, and today we finally stuck out of that, and it looks like we're kind of building back up, trading to the potential of the all-time high. So for me specifically coming into the open, what I wanted to see price do was see how we wanted to trade. Initially through Asia, we had a bit of a good buy sequence, but for the most part, it was a consolidation-prone overnight session. And so off the open here, when we saw price build up and we saw our opening range move trading to London highs, and we see a very bullish sequence, for me, that interested me in the potential of trading up higher. I will say, I went live at around 11 a.m. today. Had I traded a direct open, I don't know how many entries there would have been for us to capitalize off a very good long. Looks like off the open, we just kind of ripped up tremendously. So for me, popped on, around 12 o'clock, trading from there on out, and we ended up taking our first trade of the day. Initially, after seeing what price was doing and having our bull bias determining via higher time frame and also determining through our New York opening range move, what I wanted to see price would do obviously was see continuation. We had clear draw in mind, being this 4-hour gap fill right here on the NQ, right? And we also had an hourly gap fill as well. ES specifically had an hourly gap, which I wanted to see price trade into, and we eventually end up doing that in hindsight. But ultimately, we end up getting stopped out for a loss, even though our bias was right. Well, why did that happen? Well, simply put, this is the trade that we ended up taking. It was a 5-minute gap rebalance where we looked for confirmation, and your clear-cut confirmation off this trade, purely just off a 5-minute gap rebalance, would have been right here. So your entry would have been right here at around 1 p.m., and I took the entry where I did a minute after is because I wanted to see this 1-minute bearish gap get violated, which is what we did. We take entry, beautiful model entry, and we initially see price come up here, and we see good displacement, but ultimately we come back down. What the issue with this trade here, in my belief now reflecting back, looking at price, was purely the fact that the stop loss was way too tight. Initially, the TP1 on this trade here was going to be this hourly gap fill, which would have been a 3R. And if you guys know me, obviously you want a good combination of R, but you also want a good combination of probability. And so when your stops are as tight as they were, it caused us to get wicked out. We take entry, we see consolidation a lot, and we end up seeing price retrace essentially before coming back up here and seeing higher price. The break-even zone on this trade here was ideally the 15-minute gap fill because it was a good area of interest where there was a gap to be filled, also near a BPR fill, somewhere in the middle before our TP1 intent, which was the hourly gap fill. Then, after seeing price trade the way it did, adjusting my TP1 to be this break-even zone, which would have been about 1.2R, but unfortunately, we do end up getting stopped out. So for lesson of today, I don't think our bias was wrong. I don't think we had a bad trade necessarily. I think the stop adjustment is something that we could have definitely done. Being our optimism on the charts, right? Our goal was to see price trade much higher. You could obviously have a bit wider of a stop and still accumulate a very good R. So 5-minute gap rebalance, stop model stop, which was the 5-minute gap candle wick low. And then we end up seeing price essentially get wicked out. From there, we simply entertain the interest of taking ES off a second potential entry. Again, just because we wicked our stop chat doesn't mean my bias was completely shifted or, my validation of the bull bias, because of the fact that price never saw a full reversal off the high. We did end up seeing price come down here. We get stopped out, but we see price build right back up almost immediately after getting stopped out. And so for me, the reason you see me take a second trade in it, BES over NQ, was because of the fact that the 5-minute time frame on ES was trading and printing a lot better than what ES was. So basing off the 5-minute time frame before the pump up, you see NQ be a lot more square, right, and a lot more up and down in the consolidation phase that it had here prior to its next pump up. ES did not, right? ES was more so building back up, and we were seeing steady higher lows being formed here, and we were seeing price trade a lot closer to its high as opposed to NQ. We eventually ended up taking a trade here where the idea was a 5-minute gap go invert, right? Being that this is a 5-minute gap right here, bearish gap turn bullish inversion fair value gap. We then take our entry and we see price, essentially confirm right here. Beautiful confirmation. We're initially met with drawdown, but then we eventually come back up. and we see price run past into profit. And the unfortunate thing with this trade right here is we came out, 75, one tick away from TP being filled, which was a bit frustrating because our TP was a perfect TP, right? It was an hourly gap fill, and we see price top off a tick before take profit was filled. So now, instead of closing out small green on the day, still closing out at -1R, which is around $40,000 on the day. A bit frustrating. Obviously, we're still green on the week because we had yesterday, and yesterday was a tremendous day. But we closed out today in a day where we could have easily closed out green had price traded 1 or 2 ticks more past the high that it actually put in. So a bit unfortunate. I will say with both trades combined, in terms of a model entry, I did really like both. Both really made sense ideally, but ultimately both trades, right, did not hit TP, and we see price essentially just kind of flatten out. I guess the kind of frustrating part with this day is that we had our bias be right. We wanted to see higher, and that's exactly what we got coming into the close. But we ended up seeing price essentially not take out either take profits. So I will say with the second ES trade, this is a trade, although we were a tick away, I'm not going to be too upset about. The trade I will be more upset about was NQ, because our stop placement could have definitely been a bit better, and we could have had a bit wider stop, which could have helped us here. Because again, our consensus with what we wanted to see price do was come up here and reach this hourly gap fill. We didn't need our TP1 to be a 3R, right? We could have had a bit more of a respectable stop. We do end up seeing price get wicked out. A combination of a smaller stop and a combination of bad price prones you to get stopped out a bit more, right? It's a bit more likely. And then this ES trade here, eventually, obviously, we take, and we see price turn off, it took away. So a bit unfortunate. I guess the good thing with today is that we're not down a whole bunch, right? We're still green in the week. It's a small green week thus far, but definitely could have been a bit better had we seen ES trade a tick or two above past the high. So a bit unfortunate. That's pretty much the day. And what I learned more so moving forward is in conditions like this, just maybe have a bit more of a wider stop, a respectable stop, and still have your interest. Because again, we see bias validation, but we don't see take profit get hit. So with that being said, I'm going to wrap it up. That's the review. Let's see how we cook up tomorrow.